Now, according to the National Bureau of Statistics, Nigeria's inflation rate is now at 28.92%. This was disclosed in the NBS December 2023 Consumer Price Index figures, which measures the rate of change in the price of foods and services. Before the release, the country's inflation rate was, as at November, was 28.2%, which shows an increase of 0.72 percentage points when compared to the November headline inflation rate. Let's talk more on this, make more sense. I'm being joined by the Director, Research and Strategy. He's with Chapel Hill, Denham, Mr. Tajudeen Ibrahim. Thank you so much. It's good to see you. Happy New Year to you, Mr. Ibrahim. Thank you for joining the program.
Happy New Year, and thank you for having me on your show.
Well, interestingly, the very first question will still be around what you were expecting. Many thought that this would definitely go high, but we didn't know if we would get this high. I also spoke to Nabila sometime late last week, projecting ahead of this, and we also felt that it was going to go high. But in your thoughts now, Mr. Ibrahim, what do you think, and what are the fundamentals or what are the forces driving inflation at this time?
I believe that we have to take a look at those drivers of inflation on a one-on-one basis, on like a one step at a time basis. So let's start from the cost of production of goods and services. And that is where I believe the pressure is, and that is where the issue really lies. Let's take a look at a commodity, for instance. Let's take a look at wheat. Wheat prices globally have been falling, largely because Russia is supplying aggressively to the market. In 2023, wheat prices fell by around 28% or thereabout. But the reality is that is in dollar terms. We had our own internal or local challenge, and that challenge was the devaluation of our currency against the US dollars. So when you put the fact that we had to part away with more naira to get $1, it led us to an increase in wheat prices in naira terms by about 44%. And the question now is that, the wheat increase of 44% that the flour millers in Nigeria, for instance, are going to absorb, how do we expect them to deal with it? The best way to deal with it, and they always deal with it, is to pass price increases to those that they sell the flour to. By, let us say, about 20 to 30% price increase is passed to those that they supply flour to, and those that also get to buy those flour will then bake them into bread, and they will also have to pass some element of price increase to the bakeries that they sell their flour to make bread. In turn, those that will sell the bread to the last consumers will also build in around 20 to 30% price increase, coming all the way from the raw material level, which is wheat. And that is the reason that you and I are buying a loaf of bread at around 1,500, 1,300 currently, compared to around 700 naira, 800 naira, a maximum, like 1,000 naira previously. So that looks like 30% to 35% increase on bread alone over a 1 year period. And that is largely, speaking how the increase has moved in terms of the production chain from farm to fork, if we're looking at bread alone. And that is what is reflected in the 33.93% food inflation that was reported for the month of December. So it is, largely speaking, the cost of production of goods and services, and I've just used bread to give us, an indication of how those price increases are being passed at each stage of production. And I do hope that sort of clears it.
That's really interesting. At least it makes everyone understand what this means and what this figure means for us. But we will now look at impact of policies of government, which should have a transition period. And many will believe that we should get to a point. The president was speaking in Imo yesterday, and he said, just like a pregnant woman, when you're in labor, the pains, and when the child comes, you hear the cry of the child, the relief comes. When are we going to start to see the positives of some of these policies of government trickling to us, impact us as Nigerians? You will agree with me that people are talking, they are complaining, despite the fact that they see that, yes, subsidy removal seems to be the right step to take.
Absolutely, and I agree that everybody is feeling it. Even I, and also all of us in the corporate world can feel the impact of government policies in our respective pockets. But the reality to bear in mind actually is that there is need for income levels to increase, and that is one of the ways by which consumers can have some level of relief, and then the impact of all these policies in their way of life can sort of reduce. If you look at income levels, generally speaking, across Nigeria, we have not seen remarkable increase across all Nigerians. No doubt, there are some employers that have implemented some price increases for some of their employees, but this has not gone across all of us in Nigeria. So that is the source of complaints. Now back to what the president said, that a woman in labor will go through pain, and after delivering the child, there will be a smile on her face. But the reality actually is that there is a limit to which Nigerians can wait, to endure all these reforms. And I sense that it could be as late as like the second half of this year before we begin to enjoy the benefit of those reforms. And the question now is, between now and the next 6 to 7 months, how do consumers adapt to all these challenging situations in the country around the increases we are seeing in price levels? I think the best way for consumers is to begin to consider further rationing their pockets, to consider what they really need over what they want. From that standpoint, consumers in Nigeria may begin to find some relief on their own, even without the government having some impact. But the big picture is that these reforms will have benefit, because let's look at oil and gas sector, for instance. Petroleum product, now that is being refined locally by Dangote refinery, now that the refinery in Port Harcourt has been fixed, and they are hunting to get a perfect and or a professional house that will manage it. I think all those things are positive, but before we begin to feel the impact, it could be as late as like the next 6 months. And what Nigerians at that point should be expecting is, number one, the possibility of stability in petrol prices as the best. It could be stable, and if it is stable, any incremental increase that one sees in one's income, you will know that you don't have to spend more on petrol. It could also, result in a situation where prices are lower than where they are currently, assuming that the pricing of the product by Dangote refinery is, consumer friendly. If that is the case, then we'll be thinking and talking about, lower petrol prices, and that will be some savings for consumers, and it will be positive for their pockets. But it is not going to happen tomorrow, not even next month. It looks to me more like the next 6 to 8 months, most likely.
God keep us. We'll keep a tab on this timeline and continue to discourse around that. Now, the supply-driven kind of inflation that we have, other than demand-driven, And that is what analysts like you have also argued. How can we bridge this gap? That's on one side. We've also tried to increase rates. I'm sure, Mr. Ibrahim, we've gone this route before. The central bank has been pushing rates, and we don't know when we'll have the first MPC meeting for 2024. We are all expecting that. But do you think that we'll still have this shift moving forward?
Well, I think what is very important for us to bear in mind is that there is need for us to increase local production of goods and services. If that is the case, then we will be talking about sustainable solution to our inflationary pressure. And let's take a look at that commodity I talked about again, wheat. Wheat in this case, unfortunately for us, we cannot grow the level of quantity that we want in this country. We will still have to depend on import. But if we import raw materials such as wheat, for instance, we may have some comfort around stable FX rate. If our FX rate is stable, by the time wheat prices globally fall, we will benefit from that. And flour millers, if they do not bring down the prices of bread or flour, they may consider at least allowing it to be stable over the next 2 to 3 years. And that speaks to FX stability in this case. Let's take a look at other raw materials that companies use to produce goods that they sell. Another one is sorghum. If we have stability in the prices of sorghum because of higher output, or we even have the prices of sorghum fall, those that drink beer, for instance, will enjoy much stable beer prices at the minimum, or in a best case scenario, they may even enjoy lower prices of beer at beer parlors. So all these elements will feed into what I regard to as an increase in local production. If we do not put in place the infrastructure required to enable companies and businesses to produce goods locally, then we will still be here several years to this time talking about inflation, complaining of higher food prices, and that is because we do not produce enough that we can sell locally. We should also look at what we call backward integration. I know that there are some sugar producers in the country as we speak that are working around backward integration, that are growing sugarcane locally to ensure that they depend less on imported raw sugar from Brazil, from India. If we see that plan and that implementation gain momentum over the next 2 to 3 years, why can't Nigeria be self-sufficient to produce sugarcane that is then crushed and then converted to white sugar, which all of us consume in this country? So if that is the case, and if the government is supportive of the companies in that regard, then we will be talking about sufficiency in terms of sugar production locally, and we'll be less dependent on importing sugar from other countries, and we will be less exposed to foreign exchange volatility. That can also help us to stabilize prices in this country, and then we begin to enjoy what I call disinflation at that point.
Before I let you go, what impact will this have on investment drive? This is a year when Nigeria expects a lot of investment, of course, from abroad, FDIs, FPIs, and all of that. Do you think this high inflation will turn back investors? Do you think it would affect them negatively, talking about their decisions now of coming into Africa's most populous nation?
Let's take a two perspective look at this question. The first is around what sort of securities would they be looking to buy? If they are looking to buy equities, then we have some equities that currently are delivering what is sufficiently above inflation. Those equity names are compelling, and investors that are worried about inflation are really not bothered, about what inflation is doing. When you have a stock that has delivered about 60-70% return, and inflation is around 30% or thereabout, you are still good inflation-wise. But the second aspect is if they are considering what we call interest rate related securities. That is where the issue is. Interest rate, as we speak, for government bond is around 15% or thereabout, and inflation is around 30%. That means investors are carrying negative yield on their investment, which is going to discourage foreign investors. No doubt they will be discouraged on fixed income instruments, but they will find equities more compelling in that regard, given the rally we are seeing in the market. And I think the central bank is unlikely to increase interest rates anytime soon. They will rather mop up excess liquidity in the financial system to ensure that they have a tight monetary policy. Hiking interest rates is not going to bring down inflation. Demand driven is not the case. It is more of cost pushed.
Interesting conversation, as usual, with Mr. Tajudeen Ibrahim, who is the Director of Research and Strategy with Chapel Hill, Denham. Thank you so much. I wish you a profitable 2024.
Thank you.
Well, coming up on the show next, we'll focus